Today, I'm not seeing a real, true, like a difference that is enough to change things in appraisals, but I am seeing a difference in the amount of how much higher the offers are going, how high the appraisal guarantees are going, et cetera, and therefore it's ultimately bringing it all down. Because if the guarantee is not $50,000 on a $500,000 home, and therefore they're paying $50K above appraisal value if it came in that short, it's only a $20K guarantee now. All the values are coming down by a little bit. But I'm not seeing a true difference in what it's appraising at.
I'm asking for concessions right now.
Yeah, me too. Everything.
So here's my.
Everything has concessions now.
Yeah, everything got a bad shape. We get $1,000.
Wait, tell me what you mean. What do you mean by that?
Sorry, Rob.
So like if we're bringing in an offer on a home, say for example, it's $350, and instead of going in at like a $330 or even like, $350, which that's like a 3% concession to go towards the closing.
So you're saying you're offering
Yeah,
to the seller.
yeah.
A
You're asking for a concession back.
Oh, you're asking for a seller credit for the buyer. Okay. Okay.
A lot of them are willing to do that now.
Got it.
Like,
Because you're seeing homes sit on the market for 30, 40 days now.
yeah, so, yeah.
Understood.
That's what I've been seeing, and I love that.
It's great.
It makes it easy when you call, like, we're making an offer. All right, great.
It's great. It's great when it works. And this is one of the points I want to touch on. It's great when it works. So let's go to pre-corona real quick. Who here was active heavily, like full time, pre-corona? Who was active like they are now pre-corona?
I was before Corona, then I had my daughter in November, and then I never went back because everybody was like so scared of Corona.
Okay. So here's an example I want to give you guys. And what I'm about to tell you, I love that every realtor is under the same mindset of, we could go lower, we could ask for seller credits, we could do all these things because it's leaning more now on the buyer's leverage compared to last year. I love that that's the case because now it's becoming like pre-corona. But let me tell you what I was doing, what Connect Loans was doing pre-corona. No one was doing appraisal guarantees. It was like a secret move. Like a handful of people that I knew were actually doing them. So when there was a deal that we were involved in, we were winning all the deals. When I tell you we were winning deals same day, meaning we came in above asking, by a little bit, I'm gonna tell you why it's okay for buyers that are getting a mortgage. Came in above asking, guaranteed that above asking, and we demanded same day or next day that we get an answer, otherwise offers off the table, and we were winning it because they weren't receiving offers like that. We were winning not 90, we were winning, I swear, 95%. Like it was a done deal, like we were winning those offers. So the more people subscribe to that mindset, which is true, it's true what you guys are saying. But if we flip it and say, this family, they really should be getting this house, instead of us going 5,000 below, we go 5,000 above, which is a $10,000 margin. Someone's getting a mortgage, they're not paying cash. It's not $10,000 out of pocket, it's $50 a month. $50 a month, they're putting 20% down, that's another $2,000 at closing. They're putting 5% down, it's another $500 at closing. So we're really gonna let the client not get the house because we wanna save them $50 a month and $500 or $2,000 at closing. It's easy. So yeah, that's great when it works. And when you see the opportunity, you're like, we're gonna win it at this lower offer, of course do it. But I would debate that there is 75%, if not 80% of the time, where you don't know. You don't know that strategy is going to, in fact, make you guys the winner of the offer. You don't know for sure if it's either winning offer. It's a good offer because everyone's coming in lower. But my strategy is always, and this is a question I have for you guys, what's your job as a realtor? What's my job as a loan officer? What's your job as a realtor when it comes to getting them the home? Is our job to get them a lower payment? Is our job to get them a lower price on the home? Or is our job to win the home that the family wants? First and foremost.
I think it's a job to accomplish their mission. And sometimes their mission is getting a cheaper house, and sometimes it's getting a cheaper house.
Understood.
I agree with you in certain situations, but in certain situations, like anyone that's buying a house should feel good.
Yeah.
You're the type of person that's only going to feel good if you bought the house at a deal, whatever that deal is. That's what you want to do. You got to give them a deal.
I-
But if they're the type of person that's picky and finally found a house that they really like, you do what you got to do to get that house.
Yeah. We're also the messengers.
Yeah.
Like
What about messengers? Excuse me?
We're the messengers. We're not. Our job's not to sell your house, and our job's not to purchase a house. Our job's to message back what people are telling us.
Yeah.
So our play is only based on what poker cards we're dealing with.
Yes.
So my offer is as good as what I'm dealing with. I can't come in going, oh, I'm gonna give you a $10,000 gap, and I'm feeling like a baller, and somebody's got us beat,
Yeah.
right? You don't show up, you customize your approach based on what you're playing with.
And based on what's actually going on. 100% agreed.
Like, you have to message back, hey, listen, you wanna play, you wanna win this house, how much do you love it?
W-
That's
We have
how
to have
you
that real
roll.
conversation with the
Yeah,
client.
that's
What I
all
tell
it
them, I
is.
was like, you want a good deal or do you want a good house?
Yeah.
There's two different things.
That is like
Yeah.
the best approach ever.
Yeah.
Good deal or you want a good house? I want a good house. All right, if you want a good house, then you know you're gonna have to come up with whatever you wanna come up with when we get there.
Here's how I justify, like, in almost every situation, just so you guys know, because this is what I do when the clients we're working with. Whether you referred us a deal, it was a random deal mutual together, or we referred you a deal, this is what I do. I'm always checking those estimated values, right? And I'm speaking with the realtor who showed them the home. Like, what do you think? What are the offers gonna be around? I'm always going to the higher end. Always. Because I go over the example of $50 a month and maximum $2,000 at closing. Max. Now, the image I give them, the vision, the picture I give them is, at the end of the day, if you get this house and it was for another $50 a month and it was another $2,000 at closing, because that's the reality of it. That's the reality of it. The moment next summer or next winter, whenever it is, when you're outside having a barbecue and all your friends and family are over and you got a drink in your hand and your buzz that says it's gonna hit you, you're not gonna care. At that moment, you're not gonna care for the $50 a month, extra $2,000 at closing. Right now you care, but in the grand scheme of things, you're not going to care. If we end up getting you there and that family or friend event happens at your house, which always happens, right? At that moment, you're not gonna care. So it's a little image I give, and does it always work? No, but does it work 80%, 75% of the time? Yeah, if we can increase our chances by 75%, I will take it, because I hate when someone loses a house because the difference is $50 a month or $2,000. I hate it.
This depends on the buyer.
Of course. Some of them you can't convince.
They know exactly what they want. Any line you use, they have their own budget. They want to
Of course. Some people you can't convince. Some people, it's an investment property, right? And it's like they need to get a deal on it. I'm more speaking towards the family home, where I would still debate that there's 75 to 80% of people that would listen to this strategy. And now if they're already struggling and they're at a high price point, I had an offer, in that video that I made, Renee, we had made 8 offers that week, and one of them we knew. The guy was a $2 million home, he offered a 1.2. We were literally trying to get lucky. We already knew that wasn't gonna work. The other one that we lost, they were already above budget, and me doing the strategy, they already couldn't do the offer that they agreed to do. So me trying to push them to do that, they just weren't gonna do it, so we lost that one, The other 6 though, we won. One of them backed out due to inspection, was not good. The rest all went through, So, but all of them, we got accepted this way, except for one. One came accepted, landed on our laps without us doing a thing. So that's 5 of the offers that we got accepted. We're all done with the strategy that I just said. And almost all the offers that we get involved in, almost, not all of them, but almost, that's like the winning edge on top of some of the stuff that I'm gonna show you guys today,
You're saying you guarantee the appraisal? Is that what you're getting at? What are you saying?
What you're saying is that.
You're asking if I am personally guaranteeing the appraisal? Is that what your question?
Like on the market side.
We're not personally guaranteeing the appraisal, no, but we get the buyer. When we're doing our pre-approval, which we're gonna get into next, we get the buyers confidently ready for a winning strategy. And we know off the rip if they're not gonna be ready for that strategy, so that by the time you guys are showing them a home, you guys know, like we've already talked about this, we already went over their numbers, they're not okay with an appraisal guarantee. Like we vetted those numbers, we did a mock scenario, like a mock case trial, act like we're closing next week, they're not down for that. And we find out very quickly so that when you're out there, what power do I have when I'm making these offers? If I see I could get them the better deal, of course, you know it, right? Give them the better deal. But you're like, we don't know if this is gonna get competitive, we gotta come in strong. The buyers are already vetted to come in stronger than the market, we can win that deal. And we will, now we can. Like, when last year I was like, man, we can make a badass offer and we might not win. Today, you make a badass offer, odds are you're gonna win. Odds are you're gonna
One
win.
of the things I would take out of this too, and is what he said, getting involved,
Yeah, I love
right? So like, when someone can feel comfortable with the financing piece and getting involved,
That's the biggest one.
that's
Yeah,
the
because
biggest one
sometimes they
because,
make decisions, but they don't even know, like, can they afford it, or what is this?
Yeah, when it get that, oh, why is my
Yeah.
payment
They just
1,800
hear the
instead of 50? I'm
number.
like, how do you not know this?
Yeah.
Or like you just said, you said a number, and if they say a number, it scares them. But if
Yeah.
somebody on the financial end is on there saying, I can tell you this will change your payment by $5.
Yeah.
Yeah.
Or that's important, getting involved. I personally think, just in the last year and a half in my deals, I think what could put the top notch on my business is having a personalized approach. Because people just wanna know that they're having their arms wrapped around them.
Right.
Especially from, like, we're all, from our group, I don't know, just personally, from our culture. They just wanna know they're taken care of.
100%.
And honestly, we probably could more,
That's
yeah.
everybody.
And
Everybody, but our culture especially, like, since you.
I feel like
you
all
do a lot of-
culture probably cares sometimes the least, because they're always like, money doesn't matter, but like,
No, but sometimes they only trust the realtor, but they don't
Oh, yeah.
realize that we rely heavily on the mortgage lender because we don't know the numbers. Like,
Yeah,
I'll be honest
they
with you, I
come
don't know
to
how to
us.
read an amortization. I don't know
Yeah,
how to
yeah.
read that. I don't even do the rent sheet.
but they
Yeah.
I
come to
usually
us.
take my phone. Like, I don't even do
Well, they
it.
come to us with all these questions.
They come to us with all
They
the
always
questions.
come
I'm
to us
like, I
with
get this guy to tell them. I'm
So you guys could you guys could confidently, when you have Connect Loans on it, you could confidently route them to us to answer those questions. Odds are, if we've already had one or two of those type of conversations with the client, with the buyer, they're not coming to you for those questions. That's true. They do come to you guys for those questions. Not when Connect Loans is on the deal. We are, and you're going to see why when I cover the next item. But I want to cover one more item in regards to these offer strategies. So rates are about 1% better than they should be right now. Again, 2 months ago they were 6.25. Today it's 5.25, 5.5. If I could get you an offer accepted today for 500,000, compared to 2 months ago, or what's going to happen next month or 2 months from today, with 1% higher, $300 difference per month. So my strategy is saying, guys, we're lucky in this little window of time. Offer the winning offer, because if this was 2 months ago, you found a house, 2 months from today, you find a house, your same price is costing you another $300 because of the interest rates per month for the same exact mortgage. So let's offer the higher amount now, pay an extra $50, $100 a month based off today. You're still saving $200 in comparison to 3 months ago, in comparison to 2 to 3 months from today. And that is for the offers. Look, you know, I'm gonna toot my own horn real quick. You made 8 offers in 1 week and we got 6 accepted. That's a lot. It's because of this exact 1% better strategy that I employed. Exact, you know? So that's that. So anyone wanna ask any more things about the interest rates or about
So when
offers?
your window is 1% better, it means that we are 1% better than where we were a couple of months ago, which could save you just a very minimal amount in order to win this deal.
Yeah, but you have to preface the rates will go back to 1% here in the near future. 1% higher.
Higher.
Correct, because
Which will cost you $600.
no, the same $300 more.
Same $300.
So for a $500,000 home,
1% higher, so down law is 1%.
for a $500,000 home, it's about 300. You're going to a $250,000 home, it's 150, right? Just simple math. So it's huge. That is huge. And once you could get people to understand that, which again is part that we get involved in, it gives you guys the buying power, you know? So next item, before I continue, Connect Loans. Any? Yep.
I just want to say, like, even though it is like a 1% difference, if it goes back up, it's really just like a $50, not even difference with payment. Maybe at most like 100 from what it was like a year ago. Like, this is their forever home, it's the home that they really want to get into. That shouldn't be a big deal for them, you know, like, it might be a little bit more when it comes to like the cost of the rate, or maybe like the rate itself looks higher and it's a little bit scary, but realistically, the difference that it makes on their monthly payment is not much. It's almost like as if they do already have a PMI, their PMI could also, you know, like the PMI could drop, you could put it to them in that sense to be like, hey, it is gonna be higher, but think about it. You wanna have this home, you wanna buy this home for your family. It's really just gonna be a $50 difference a month. Which, does that really mean a lot? If not, then maybe you should be looking for a house that's lower, or maybe you should, it's not your forever home. A lot of the times when you say that, people will say, well, I want this home, regardless how much it is. Like, or I'll wait for it and I'll find a little home that I'm really gonna be taking out a little risk for. But realistically, like a 1% difference, like from what I've seen, it's not really much, like for their monthly payment, especially for the kind of clients that we have. It's not like a huge difference. But the biggest difference was probably just like how much we like lowered their rates from in 2020 and 2019. That was
Oh, yeah.
really a big difference.
Oh yeah.
Right now, the difference is not really that much. So if you put that into perspective for them, I think that it just makes them feel a little bit more comfortable. Because it's like, oh, the rates are higher, everyone, that's what the rumor is
I want to add one thing on top of that. They're looking, if we did go 10,000 higher, they're thinking 10,000. $50 a month, 2,000 at closing. That's it. They're thinking, but in their minds it's 10,000. It's our job to let them know, to remind them, you're playing the finance mortgage game. You're not playing the cash game. If someone's paying cash, different story. But almost everyone is mortgage. So it's not 10,000. And again, if they're putting a lower down payment, it's not even an extra 2,000. It's a $50 a month, and again, 5% down. A lot of borrowers were doing a 5% down. It's only $500 extra at closing, 1,000 maximum. You know,
Think
big deal.
about how long they're really gonna have that house. Like, realistically, at most, it's like 5 years. Like, even if it is their forever home, they're not even gonna ask about what they're gonna be spending. But if it's a home where they're like, I wanna expand, realistically, it's gonna be about 5 years. So they're gonna sell the home eventually to get that money back. You know, it's really just for the time being. So 10,000, like you said, like 10,000 seems like a big deal, but let's think about like how long you're gonna have that house. What's important is what your payment's gonna be in the next like 2 months once you get this house.
I want to add to that. Another thing is, especially in our culture, if you show them a house and the wife loves it, no matter what, it's no matter what the price is, how much the down payment is, they're gonna buy it. So it's more like the girl loves it, but the man doesn't like think he can afford it.
I don't know about the no matter what, but yes, it increases the chances. It increases the chances.
Listen, if they can buy freaking 2-carat rings, diamond rings, they can afford this house.
Okay.
They're good. They shouldn't be proposing that.
I mean, we're not buying 2 years anymore.
Yeah, I think.
10 years ago, huh? So next question, so if we send you guys a client, off the bat, you guys start like letting them know, because to me, when I meet a buyer, I always tell them, what you're approved for is good to know, but what I really care about is what payment you can afford every month. Has your lender explained to you, did you tell them what kind of, what areas you want to be? Because what I like is my buyers to know exactly what they're getting themselves into with taxes, insurance, and the mortgage all together.
Yep.
Like him and I had run into a situation where, remember, you okay? Yeah. Where the taxes ended up being too high for our client, we had to literally pull out.
Yeah. A homeowner association, if it's a condo, $450 or $250, you know? Yeah.
Something that you guys do like on your own without us, like I always make my buyers go back to their lender and make sure that they know what they can afford, because that's what I really care about.
That's 100% what we do, and I'm going to get into that. And to understand the way that we do it, the way that I train everyone, is act like the realtor doesn't do their job.
Yeah. Well, that's what we.
Act, even though the ones that we want to work with, act like they're not. Act like we're their only source of information.
100%.
We get all those answers very quickly.
To tag on
Very
that,
quickly.
You know, we always have, when we're selling homes to people that, want to construct in the home, I think where I have a hard time, and this is my bump, is like, are people able to, are the loans for construction being pulled out separately? Is that a separate program? Am I gonna take us off topic? I don't know.
No, I'm going to answer that.
I know, like, is that affecting their mortgage payment on the first loan?
I'm going to answer that.
Yeah, like those construction loans.
I'm going to answer that. First, I'm going to get into, because her question was actually leading into the exact next topic. So we're going to go to the next topic. And I have your construction loan question on here as well. So the next item is our value, right? Why realtors and buyers, realtors and borrowers, why they choose us. Look, I'm going to speak from one person in the room, from Fadi. His sister and his brother-in-law, we're their mortgage company. I could confidently say that without him or them confirming it. We're their mortgage company, because we've done a deal for them. I did a deal for them in 2015. I did a deal for them in 2018 when they built this house. I did a deal with them in 2020. We have that relationship. His sister and brother-in-law, they're our mortgage clients, like for life. Unless we don't get back to them when they're calling 2, 3, 4, 5 times, we're their mortgage company. And actually, it's funny. It was referred to me not by Fadi. It was referred to me by my brother-in-law, Ziad Jarbo, back in 2015, because he does their insurance, So that's how I got that. That's what I mean about how we network, and it's all reputation. It's how we get our business. So the next item is our Connect Promise. The Connect Promise is quality, transparency, and speed. Quality, meaning whatever we do, we're going to do it the right way. Transparency, meaning good news or bad news, you're going to know about it, right? Speed, we're going to go fast.
Hide anything, we'll call you right away and be like,
Yeah.
I don't like surprises, so I'm so happy.
Oh, yeah. Speed, we're going to go fast. Now, fast is whatever fast means for that deal. What is the fastest truth and reality of that deal? Our average is 17 to 20 days to get a clear to close. Some deals, naturally, it is what it is. It's going to take 30 days. It's going to take 45 days. But overall, our average is 17 to 20 days. Even if we have a complicated deal, because we've done the work up front to get the complications out of the way. The next item I have written here is the certified approval process. Our approvals are not pre-approvals. They're certified loan approvals. Every loan that is pre-approved in our office that is being sent out has that already ran. Meaning we have the Fannie Mae approval. We have the Freddie Mac approval. We have the FHA or VA approval. It's not a pre-approval we think. This is it. As long as we didn't lie in our application data, right? As long as we actually were truthful to ourselves and put the right data in, the credit report is what it is, we're getting that actual loan approval. And that's one of the reasons why we speak so confidently. It's not just I think or I know you qualify. It's I got the approval. Like, this is your data. I already got it. I'm not waiting for UWM. I'm not waiting if I was a direct lender. I'm not waiting for Bank of America. I'm not waiting for Wells Fargo. I'm not waiting for anybody. We get the answer from Fannie Mae, Freddie Mac, and FHA themselves, and then we choose the lender. It's usually one of the same three lenders, but we choose the lender based off, do they have anything against the natural guidelines? It's called the overlay. If a lender or a bank says, yeah, Fannie accepts it, but we don't, that means it's called an overlay. They have their own more strict guideline on top of the guidelines. We vet all of that before you're out there shopping at home. Now, there's some nuances like the deal we're working on. There's some nuances, right? Where, we have an income scenario with this scenario. So this is what it is, but there's a human element that says, oh, this is recent, et cetera. But 95% of the deals are not the type of what we have for our buyer, where there's a dramatic change in their income just all of a sudden, right? So in general, 90% of the time, that's how all of our approvals are. So we don't always provide that actual document, but for a realtor that knows what it is, and I could tell when I'm speaking with the listing agent, we actually will provide it. We'll say, hey, here's our actual Fannie Mae, by Fannie Mae, underwriting loan approval. Excuse me, I'm gonna look at that in a different format.
So is data pulled based on a verbal conversation or documents that were collected?
Documentation.
So how long does it take you to get someone pre-approved?
How fast the borrower goes. In general, today with our generation, it's fast. Like 1 day, 2 days, we're done. If they take long, it is what it is, But I could approve them and say, look, we have it based off the verbal. I need their documentation though, before I could tell you it's for real,
So like if you're the realtor, we're pre-approving a deal, right? Off their verbal, if they haven't sent us their income documents, we can tell you, but we will not release our letterhead approval until they send us their income documents to make sure.
Yeah, there's also stages. So there's pre-qualified, there's pre-approved in underwriting, there's conditionally approved. Like where are you, if you provided them a letter and you went through your data software and you gave them a verbal, like a letter?
Not 95% of them are not pre-qualified, are not pre-approvals, they're certified loan approvals.
Certified loan approvals with letters.
Correct.
Pre-underwritten?
Pre-underwrite. We are,
Well, that's what I would think,
Pre-underwritten.
pre-underwritten.
And
the other 5% is where our deal falls into, because there's a nuance where even though the documentation is there's this dramatic change all of a sudden where the human underwriter beyond the software says, hey, what is this? Are we comfortable with this? 95% of the time, though, that's not the case, right? When I have the client that just dramatically changed their situation, right?
and if somebody like you offer more programs than a lender would,
We offer
broker.
we offer every program that is available other than 2, which I'm going to cover. So to answer your question, it's all certified loan approvals. I make the joke, we're self-proclaimed underwriters. We don't have underwriting licenses. We don't work for UWM or for Quicken Loans. But I'm telling you, we teach underwriters things every month. Every month, like we'll teach, hey guys, here's a guideline, we could do this. You're telling me no. Here's that, I say we gotta become like lawyers. Here's the Fannie Mae, Freddie Mac actual guideline by them in their guideline book. It's a 1,000-page handbook, okay? Here it is. And they're like, oh. And then they'll send a bulletin out to the company and they'll like BCC us. Like, hey, we just sent this out to the company. Like we could do that. As a company, we are okay with this. We just learned something new. So we don't take it to the lender. We go direct to where the lender is going. The lender is going to Fannie Mae, Freddie Mac, and FHA. They need the same approval that we're getting up front for them to underwrite the loan, for them to approve the loan, right? So that's what we do. You'll hear other people say, I have a licensed underwriter, I have this, I have that. It doesn't matter. If you have a LO or a company that knows how to underwrite, that does what we do, which I would argue I don't know anyone that does it to the level that we do, okay? I really don't. I know they're out there, but they're not competing with me. They're not in our market. I can tell you that, you know? So that is what this is. And I'm not gonna show you all the details here because it gets confusing. It's literally that's all the data regarding this borrower, right? Literally, that's how long this is. So I would only ever send this if the listing agent knows what this is and they're doubting us. Like, I feel like you're just, I'll be like, hold on, do you know what this is? Yeah, boom, here you go. Here's an approval, let's get it done. Now, any questions with this? Because there's another layer to this.
So you're saying that, like, for example, I had a situation where the listing agent was like, there's a monthly situation going on right now. I really want to go through your buyer, but I feel like, are you sure they're not flaky or something? So this is something you would provide to confirm that they are solid buyers?
Correct.
They want more.
Correct. Because I don't just want to provide it because it,
Provide when we're on the buy side.
On the buy side, that's what it was, yeah.
And then it also makes us feel comfortable.
yep. Generally providing this to the listing agent,
Not so long.
but generally providing this to the listing agent could confuse them. But to answer your question, when I see that they know what it is or that there's a struggle in the confidence of us, I will provide this and explain to them what it is. I'm like, this is issued from Fannie or Freddie, and that's what we got. So that's that, and we'll provide it. Sometimes they ask for proof of funds. Oh, you're doing an offer 20% down and you're doing an appraisal guarantee? Let me verify that they actually have the funds. I'll send it to them. Verification with the buyer, obviously. Are you okay with me sending the funds? Then we get your offer accepted. Because they want to make sure the appraisal guarantee is not bullshit, right? We show them the proof of funds. Now, I don't like doing that because for some reason when I've dealt in that situation where they're asking for the actual proof of funds, it's like a 50-50 still where I'm like, it should be a guarantee. I don't know what that is. Have you guys ever asked for proof of funds from the listing side?
I did a lot last year, but it depended on how sketchy I felt. I didn't have a loan officer. Somebody asked me for proof of funds. We put an offer on a house in Shelby. I was the buy side.
Yeah.
And the other person was the sell side, and they asked me, and I told them full gap, and they said, let me have the proof of funds.
Yeah.
I had the person give me 17 of their brother's checking accounts.
Oh, man.
Literally, I didn't have the names on. I was like, here's all the cash. I mean, they're gonna get it. They can get it gifted.
Did they accept it?
They accepted my offer.
Nice.
Yeah, I mean, they did, but you had to show the proof of funds. But it
Of
depends.
course.
If I feel sketchy though, like.
Like you're just asking for proof of funds and you're not even telling me, like, if they're like giving you confidence, like you prove this to me, we're good.
So I did have one,
You know?
and this was sketchy. I had one, I was the listing agent. I had an FHA. I had an FHA, they were approved, and then they put $100,000 down payment. Because they were only approved, what is it, up to 460 for FHA?
Yeah, it's like
It was 460.
Call it.
420, I think.
it's around 420.
420, and then they put $100,000.
It's actually this year it's around 450, but go ahead,
That was
excuse me.
sketchy. I'm like, okay, you can't get approved for conventional, but you're putting $100,000 down on an FHA loan. That was sketchy to me. But then I'm like, can they support, who can give me the $100,000? Because they're gonna put $100,000 down in cash.
The difference.
Well, then I got scared. I was like, this is sketchy. FHA, then I called the mortgage lender and I said, and I kept asking for proof of funds, ghosted me. Never.
Done.
Never took the
It
money.
wasn't ready. And why would you?
But see, it worked in our favor.
The agent that believes they're being morally ethical when they're hiding that information when it's not. They're really not even deal makers sometimes, but it is what it is. So that's that. We're gonna go one layer deeper into this approval, right? So before I do that, I just showed you guys the underwriting findings. To go back to Rhonda, you refer us a client. Group text, hey Terry, this is Angela that I told you about. Angela, this is Terry that I told you about. Please get them taken care of. Thank you so much, Rhonda. We're gonna start a separate text, checklist, etc. You're thanked and you're removed from the thread, right? We get it going, we pull credit. One of us does a credit review, a full credit review, go over each individual account. So if there's any hiccups that we're gonna come up later in underwriting, they happen now, okay? 2, we get their documentation. We run the underwriting. We do this part that we're talking, that I just showed you. We act like you're buying a home of $500,000, which is what you said you want. We get real estimated property taxes. If it's an HOA, we get the estimated HOA for that price range. Estimated insurance. We do an estimated scenario because I vet whether they're gonna be a person who could go above asking with a guarantee. Say, hey, this is what we're gonna do. It's gonna be around $53,000 to close. Should we employ this strategy before we send you out there with Renee? And we get the yeses or the nos on the spot. So again, by the time you are out there, you know this buyer is gonna be at asking price or below. This buyer is gonna be at asking price or above, and they can leave a 5 to 10 to 15 to 20. Now you have the power to just, I know what I gotta do to make this deal happen. Let me check my estimated values. Connect Loans, please pull up your estimated values. Let's see where they match and where they don't. Let's decide what type of offer we're doing. With that being said, there are 0 offers that go out without us running another underwrite on that home and running the numbers with the client. Meaning, I don't care to know every house you're showing them. That would be a waste of time. It's the house that you're like, they're interested, they wanna make an offer, you're sending us the address. You'll always be on a group chat with me and one of the girls, always, because if it's just me, I'm not gonna get to it. So one of us will go and say, okay, we're gonna go over the numbers with the client on this home, and we decide right then and there. Now that's most of the time. Sometimes it's a Friday night, you're making an offer, we're all already off work, we're somewhere. Make your offer. If it has to go in that night, we're gonna go and still vet it the next morning.
But, right, if it's really important, call us. If it's something you're doing on a Friday night, don't be like, hey, it's after 5, I can't interrupt them.
You sure? 'Cause I
Call
call
us.
at like midnight. Are you sure
You
pick
can
up my
call us. Look, I can speak for myself, I have 2 little kids, I'm always awake, so I don't sleep. You can call us and let us know, hey, it's urgent, I need the answer. We will get to it.
You know when we work.
The next item is what I call a spark approval. Just like our certified approval, it's a legitimate underwrite. However, I want every realtor to know if you're receiving a spark approval, that means we're coming in better than the market by at least 2 attributes. We're coming in above asking. We're coming in with an appraisal guarantee. We're coming in with a high deposit. We're coming in with 20% down. There's at least 2 attributes that say this is for sure, we're at least beating metrics from other offers. And when we send that spark approval, there's another video that I'm gonna show you guys that goes with it. And again, all these offers are happening with, I insist, no matter whose offer it is, I'm having a personal conversation with the realtors involved. So our spark approval gets accompanied by one of these videos. Whoops, this right here. Very quick video. One of the attributes could be that we could guarantee a 17 to 20 day clear to close. Not, oh, it's our average. No, on this borrower, we could guarantee a 17 to 20 day close. So if we hit at least 2 of those metrics, we send it out as a spark approval. And we explain what that means to the agent so that they know they're getting a more confident deal, not just an approved deal, a more confident deal. Yeah. Yep. You guys will know that that's what it is as well, but it's more so how are we presenting this to the listing agent to get the offer accepted, you know? So that's that. Now, so I want to ask all of you a question. Have you guys been involved, not in a full appraisal guarantee situation, but an appraisal waiver, meaning you did not need an appraisal on the home?
I have that, and I
Tell
was
me about
gonna
it.
ask that. Myself and Selma, one of the girls at my office, we wrote an offer for some clients that were from Chicago, and the house we put an offer on was $600,000. She got an appraisal waiver, so we didn't even need to do an appraisal. But because of their credit score and how great they were, that's all I know about it. But I don't know, I could ask for that, but I don't know what that qualification process is.
Yeah. Okay. I'm going to break that down. Who else has gotten an appraisal waiver on one of your deals?
I've had it like once or twice. I know once for sure. I think it was based on the house though. I don't think it was based on just the borrower.
It's both. But tell me about the situation. Tell me what it was.
So we put an offer on a house for, this was like a few months back, I wanna say like 340.
Okay.
And they were asking like around 315. They were giving a full appraisal gap with that.
Yep.
And then always with my offers, I have the lender, whoever it is, call the agent. And he was looking at it, he was like, man, great news, I can give you an appraisal waiver with this offer.
Yeah.
So he wouldn't have did that.
Okay. That was 20% down, wasn't it?
Yeah, it was 20%.
All right. So I'm going to tell you how you get it. You'll only, it's a combination of the borrower's qualification and the property itself. So Fannie Mae, you'll only get it on a conventional loan, only. Fannie Mae and Freddie Mac, they gather their appraisal data in the area, say, okay, they're offering this much we think the home is worth that much or more. The borrower's got to put 20% down. They say 10% down works, but I've only had it less than a handful of times. So I don't tell people that because you're lucky.
Gene had that
Oh,
appraisal
yeah.
waiver.
Yeah.
Did he?
Remember? Yeah. That was the other one. I was trying to think of it. Sorry. It was our
I don't know
client
that.
together.
So 20% down, good credit, property, the area has got to, the amount that we're offering has got to make sense to Fannie Mae and Freddie Mac. With that being said, you made the offer, you got the offer accepted with a guarantee, then you found out you had an appraisal waiver, right?
My situation was that,
Okay, here,
I think he
because they had some cash.
knew up front though.
you did an appraisal guarantee or was your offer an appraisal guarantee or was your offer an appraisal
I
waiver?
think it was an appraisal guarantee. And
This
then
is-
waived it after
That's
it
what
was-
happened.
and then
The-
he waived it after it was accepted.
This is my point, and I know that because nobody does what, I'm being a little cocky, but nobody does what we do. So when your offer's going out, if it's a conventional deal, you guys are gonna know the potential for this buyer, we could possibly get an appraisal waiver. So do not make the offer without us checking. We run it. This buyer, we already know he's putting 20% down, so what he wants to do. We run the offer that we want to do after we get all the estimated values. If we get an appraisal waiver, your offer is going in with a spark approval no matter what, because that's an appraisal waiver, it's the best thing you could ever get. It's going in with a spark approval. The listing agent will know that it's a full offer guarantee via an appraisal waiver, meaning no appraisal required. Now, if you're the listing agent and you got an offer for $500,000 from me, and you got an offer for $500,000 from Fadi, you're like, damn, they're both Kashats. We like the family. We know who they are. You know, Fadi's offering a $50,000 guarantee. I know my house is not going to appraise $50,000 short, so I'm fine with Fadi. But Terry's offering an appraisal waiver. Which one are you going to take? It's pretty much the same deal, but which one are you going to take? You're going to take the waiver unless you're doubting my pre-approval. You're going to take his offer. Otherwise, pretty much almost always, you're taking the appraisal waiver.